Well, let's just talk first of all about what's challenging this particular industry in the country. And there's been that there have been reports that are coming through that a raft of proposed new legislation governing solvency and business practices are seen as threats to this industry. Just give us a little bit more detail of what that proposed new legislation is.
Well, there is quite a number of new legislation. I think the most significant is the solvency legislation, which in a sense is an adaptation of what we've seen in Europe with the solvency requirements in the last 2 years. So that's Solvency II in Europe. In our environment, we call it SAM, which stands for Solvency Assessment and Management. And what that seeks to do is to introduce risk-based approaches to solvency calculations, as well as governance and transparency in disclosures and so on, with a view to improving the transparency in the industry and the performance in general.
How much of this has been, we have seen, reform not only here in South Africa, but all over the world when it comes to the financial services industry? How much of that has been what has probably, been a forecaster of what this would be, having this legislation coming through?
This legislation has been long in the making. I think we're now into our second year of implementation, or the journey along implementation, and that will carry through to 2015. Europe are probably 2 years ahead of us, and we'll probably start implementing by 2014. It's not going to go away because we are signatories to the international bodies of financial services supervisors. So this is copying what is happening in Europe, and it's not going to go away.
What I want to understand, if you're talking about this probably improving the industry, why would it then be seen as a threat to the industry?
I think the first thing is the costs. And there's no denying that the costs are very significant. If you look at what is happening in Europe, for example, they're looking at spending about £1 billion across the industry just to improve processes, risk management, disclosures and committees, and also to clean up the data in legacy systems. If you come back to South Africa, we've got exactly the same problems. We've got legacy systems going back, in some cases, 50 years that need to be updated. We need to clean up that data.
Give us an example of a legacy system that you would say.
For example, you've got computer systems that have been in-house developed and patched over the years, and that in a sense are creaking and need to be updated by more modern systems. So that's the legacy side of it. Solvency II requires that a lot of the reporting that happens relies on a lot of information, and for that we need the legacy systems to be updated.
Let's just talk about the increase that we saw in new business premiums, and you were saying that this reflection, that 10% increase that we saw there, reflects an increase in demand for life insurance products. Why that particular sector for the business?
If you look at what happens in insurance, first of all, it's a grudge purchase, and it's heavily influenced by disposable incomes and levels of household debt and so on. We've seen a reduction in levels of household debt, and in a way that means there's more disposable income for people to afford insurance products, life insurance. So that volume growth of 10% is real, because if you compare that to CPI, for example, at 5%, you can already see there's a differential. So that's positive news. What's also important to note is the quality of that business that is being written. We've seen an improvement in margins from about 2.3% to 2.6% in that new business volume increase, which is encouraging when you consider there's economic uncertainty, there's poor investment performance in the environment, and globally we don't see any growth at all. So it's very encouraging for South Africa.
So that being encouraging, do you expect to see this continue as getting these positive growth numbers?
We hope to see it continuing. However, in the report we do highlight some of the challenges that insurers need to prepare for. For example, the increased cost of and it's not only SAM, it's things like market conduct, like TCF, treating customers fairly.
I want to talk a little bit, sorry to cut you in there. What I do want to ask you though, with these increased costs, I mean, do you see this being passed on to the consumer?
I cannot say that. Someone has to pay, obviously, but I think it's important not to dwell so much on the costs. Obviously, costs come first, but there's a whole lot of downstream benefit that comes from having more stable and more solvent and a stable financial system.
Okay.
And then hopefully better management, risk management processes, and better profitability in the long run.
Okay,
so costs immediately and benefits later. Talking
a little bit about profitability, the report was saying between 2007 and 2010, expenses incurred by large insurance officers, they tracked CPI. Now the problem that we're having since the past 18 months is that those costs seem to be more than CPI. Going forward, yes. Do you see that trend continuing? We see that continuing for the next, until about 2015. And a lot of that is driven by the increased burden of regulation. So implementing Solvency II is a significant, comes with significant costs. Here's my question though, with all your optimism, because it seems as though there are a lot of issues that are facing this industry, and yet you still remain quite optimistic.
Yes, I'm optimistic in that we see growth in South Africa and opportunities which we don't see in the global industry. So that's encouraging, and you've also got to realize that South Africa is also diversifying into other countries like Africa, India, China. So there are opportunities which present growth and bring growth opportunities to SA. So it's not all bad news.
Let's talk about what the opportunities you think of. You talked about African expansion there and an expansion right here in the local market. But what other opportunities do you see that could mitigate some of those threats that you've discussed?
I think the threats, which is the costs, if you look at the growth that would come after implementation of Solvency II and with the expansion plans that we're starting to see, would far outweigh, in my view, the costs that we're seeing now. So it's a timing effect. And I think if you look at the scale of the expansion that we see in most of the strategies that we see with the big insurers, for example, I see one big insurer with 13 African operations that have started. And that could be either with joint venture arrangements or greenfield operations that they're starting up. If you look at what they're projecting for the next 5 years or the medium term, then you can realize that there's a lot of potential. The other thing to realize is that South African insurers are very good at what they do in terms of innovation, coming up with new product ideas and so on, and also very competitive and aggressive. And you can see the announcements that have happened in the last few weeks with Mutual and Federal, for example, looking at Africa expansion, Old Mutual buying into Ocean Life in Nigeria and so on. Almost every single big insurer has got huge plans for expansion. So that says to me that there is opportunity, and they're not sitting back, and they're not waiting for Europe to come and get into the space before we do. So a lot of positives coming up, in my view.
Thank you.